Hey guys, Coach Joe here to talk about taxes. A few weeks ago, the IRS actually updated our tax brackets, and this is actually a good thing. This is in response to inflation to avoid something called tax bracket creep. What do I mean by that? Well, let's take a look. So for the year 2022, this year, if you're single filing or married filing jointly or head of household, either way, the tax brackets have gone up. We'll focus on married individuals right now. So let's say filing jointly, right, for this year, when you file between January and April, let's say of 2023, you're going to be paying about 10% for your adjusted gross income. Now, this is what I'm going over is very broad base. Taxes are much more complicated than this, and state taxes, may or may not apply. Some states are income tax free, some are not. New Jersey, but in any case, so your adjusted gross income after deductions, credits, and all is anything up to your first $20,550 is only taxed at 10%. And then again, in between that, $83,550, 12%. And after that, you can see how the brackets go up with as your income goes up. So let's say if you make $90,000, only your last, let's say $6,500 is going to be taxed at 22%. The rest is going to be taxed at a lower tax bracket. We see $20,550, $83,550, $178,000. But now let's check out 2023. 2023, you can see with just the difference in the years, you see how you get more. You're up to $22,000 now. That's taxed at the 10%. And then between that and not $83,550, but $89,450, 12%. And then now you can go all the way up to $90,750 without having anything taxed at more than 22%. And what that means for you over time, again, just for, let's say, the immediate year, and then we'll go over time. So let's say that together you'll bring in, let's say, $190,000. So if that's this year, then you have, first $20K, tax 10%, $83K, 12%, and then you tax at 22% up to $178,150, and the rest will be taxed at 24%, if that's your adjusted gross income with the two of you. Now, there's a lot of us got raises and such, jobs are offering more because of inflation, they kind of have to. Not that it increases your purchasing power if you factor in just how much the cost of things goes up. But now, if you're making, let's say $190,000, not only do you have higher income brackets for your lower taxes, so your first $22,000 taxed at 10%, the first $89,000 instead of $83,000 taxed at 12%. Now, you have nothing taxed in the 24% brackets or higher. Your whole income is covered with the lower tax bracket. Now, essentially, if you look over time, there's a pattern. So let's go back to 2001, for example. The lower tax bracket for lowest amount of income, let's say the $0 up to your first few dollars are made, was taxed at 15%. And you notice how it's come down to 10% over time. You see how it's 2001, you see 2006, 2005, 2003. The tax bracket, that was 2001 to 2002 actually. Look, the tax bracket for the lower end, what would be your first $22,000 now for married couples in 2023, the first dollar is only taxed at 10% now. And who knows, that may go down in the future. Also, you notice the income limits. Let's say to get to 15%, back in 2002, you had to be making $12,000. And everything above that would be taxed at a higher percentage. But now, to get to 15%, well, no, it's not now, but 2023, it's $14,000. You can see it creeped up a little bit. In 2004, you had to get $14,300. Fast forward on something like 2018, and now we have a 12% bracket for our second bracket. So, and to get to there, you need a $19,000. And now we know that for 2023, for you guys to get to 12%, you need over $22,000. So, what does that mean to us as investors? Well, essentially, investors, let's say if you are retired, if you're looking to retire soon and you're thinking about this, you can actually, to an extent, control how much you withdraw from your accounts, from your investment accounts. let's say, for instance, you have a traditional IRA, or you have a 401k, or 403b, or 457k from your job. Now, with those tax qualified, tax deferred plans, when you withdraw the income, it actually counts as ordinary income. So you're following those same tax brackets. So you can actually withdraw less money in order to be taxed less. Let's say that you usually draw, let's say, $120,000 a year. But this year you might only need, let's say, maybe something like $80,000. So what that can do for you is, check it out. So in 2023 brackets, let's say the tax brackets are even raised up, the income limits in the future, they'll most likely be way more than this before you start getting taxed at higher percentage. So let's say usually it's drew with 120,000, so you're used to having, let's say, maybe 90,000 to your 120,000 tax at the 22% bracket. But this year, you really don't need to withdraw that much, so maybe you only withdraw up to the 89,450, and then you don't have anything taxed in the 22%. Now, this doesn't apply if you have a Roth IRA for anything in a Roth IRA. Now, if you saved you already got taxed on that. So all growth and everything you put in is drawn completely tax-free. That's right, completely tax-free. So if you have a mixture of both, let's say like Roth and traditional, this is your chance to, let's say you just retired. The move is normally to take money from the Roth first and allow the traditional retirement account, the pre-tax dollars, to grow tax deferred for as long as possible until you're forced to take required minimum distributions in your 70s, but that's beyond the scope of this video. Maybe we'll make another one for that. But also, if you have a voluntary account, let's say you just picked up and started investing, you sign a Webull, and I'll leave you a link for the description in that. They have Roth IRAs and traditional, and rollover and involuntary investments. So I just took my own money and I started investing. It wasn't in any type of plan or anything like that. But you're dealing with, as long as you hold your investments for a year or more, you're dealing with something called long-term capital gains. And for 2023, I don't think these have changed from 2022, but check this out. Let's say you married, filing jointly. We'll focus on that for now. Let's say you withdrew your 120,000 or your 300,000 or your 500,000 up to 553,850. Your maximum tax rate is actually 15%. Oh, by the way, it is a 0% tax rate. That's right, 0. If you live in an income tax-free state, even better. But for federal, it's a 0% tax rate up to your first 89,250. So let's say you don't really live off of 120 this year, so you have your first 89,000 or so is taxed at nothing. And then the rest, let's say the 90 to 120 is taxed at 15%. This year, you really don't need to withdraw 120, so you draw your 89,250, and you take your money completely tax-free. So that's a few strategies I wanted to give you guys, a few things to think of. Tax brackets will generally decrease in percentage, at least for the lower end, over time, and also the income limits to reach higher tax brackets will increase. Now, that is sort of offset inflation, so it's not something to get too crazy excited about, but you can sort of use this to your advantage. Leave your comments below. Your feedback helps me to improve the channel. Like the video, subscribe if you haven't already, and if you got value from this content, hit the share button to spread the wealth.